why your stops are so much more important than your price targets. And is ETH set to go to new highs? We'll find out when we go to the charts. All right, let's go to the charts for this week's Ninja Trader Charting Edge. Got ETH up here on the daily. Same old, everybody. 20 period, 3 standard deviation Bollinger Bands. Red is the 10-day moving average. Gold is the 20-day moving average. Everybody's getting really excited on this ETH bounce right now, me included. To be perfectly honest with you, it's still one of my biggest positions, so nobody wants to see it go up more than I do. And when I look at ETH, I talked about this a few weeks ago. I said it's really just a range-bound trade right now. And I think that's the case for now. I think we're in a similar situation that we were in back in April. I'm going to show you why. If you look right here, I talked about how the Bollinger Bands were kind of bumpy. We're boxed in inside this older Bollinger Band peaks, and we just look like we're probably going to be stuck between probably the mid-teens and maybe 3,200 on the high side. As of right now, we've been holding above the 10-day moving average pretty steadily over the past couple of weeks, which is very positive. What it reminds me of is this situation right here, and I think we're in that same type of situation where we're going up. It's kind of bumpy Bollinger Bands. I think we could look to retest the 20-day moving average, which would be right here around 2175, maybe 2200 by the time it gets there. That to me is going to be a critical area where I'd look to actually get back in more of my position. Not quite a full position yet, because as I talked about, I just don't think it's ready yet. And if you see what it did back here, several tests at the 20-day, then regained it. Then you got clean Bollinger Bands starting to open up. Right now, we could be there. I hope we're there, but I just don't see it. We just remain in this range with choppy Bollinger Bands. I think we need to see a little bit of a pullback, then a pushback up, and then look for that clean Bollinger Band. Up top, I think 3,300 is this old peak. That's where I would take off a majority of my ETH if we got there. So that's what I'm looking at in ETH in this week's Ninja Trader Charting Edge. Traders, your stop prices are so much more important than your price targets. I put this tweet out the other day. The best technicians aren't the ones with the best price targets. They're the ones that know the best place to put their stops. Let me take you back to the ETH chart. In the Ninja Trader Charting Edge, I went over where I think ETH could go, which is around 32 to 3,300. I said that's where I would take off a majority of my ETH. But I didn't talk about where I'm wrong on that trade. And that's really ultimately what's the most important. And where I'm wrong is if we start to take out these recent lows. That price is so much more important to me than the target. Why? In the Ninja Trader Charting Edge segment, I talked about where I think ETH could possibly go. I mentioned 32, 3,300. That's where I would take off a majority of my position. Many of you know I like to use the Bollinger Band peaks as price targets, but I want to talk about the more important price, and that's where I'm wrong in this trade. I've talked about how this is one of my biggest positions right now, but it's not quite a full position yet. I'm wrong if we start to take out these lows. I talked about this several weeks ago, how I think we're just range bound, and I think that we're just going to continue to bounce off of these mid-teen areas and potentially work our way up to 32, 3,300. But it's about executing the journey. I can't just step in and buy it here, even though I don't think it's quite ready to go up to 32, 3,300. I have to manage my risk. I want to try and buy as close to where I'm wrong so I can get on the biggest position. That's the price that matters to me. Because if I start to add to my position up here, that totally throws off my risk. Now I've got way too much risk on the table, because if it were to go all the way back down to 18, 1,700, I wouldn't have any bullets to add to that position. That's why the risk price is the most important price. Now I know how to execute ETH. Even though I think it's going to 32, 3,300, I can't step in and buy here. I have to wait for dips. And I like to use moving averages. I talked about the 20-day moving average, 2175, probably going to be right around 2,200 if ETH does start to pull back. And to me, I can manage my risk much better there, because now I'm closer to my risk price, so I could actually add more to my position than I could if I added here. Because remember, your position size is determined by what? Not where you think the market can go, but by where you're wrong in your position. I can't buy that many ETH up here because the risk price is too wide. But down there, I could buy more ETH. Let me take you to my next tweet. Trading is very little about figuring out where a market may go. I think that ETH may go to 32, 3,300. I hope it does, but I don't know that it will. It's mostly about where we're wrong on an idea and executing the path we think it may take. Let me take you back to the chart. Just to tie everything in here now, 32, 3,300 is my price target 4 ETH. But that really doesn't matter to me. I have to execute the path. I already mentioned how I'm wrong if it gets down below here. Just because I think we're going to 3,200 doesn't mean that I can be all in here. I have to be smart about it. Everybody talks about managing your risk. Well, a big part about managing your risk is knowing when to add, when to take off. And I know that I need to be as close to my risk price, which is just below these lows here, to be able to add to this position. If I add in here, that totally throws off my average price. Because I talked about this, that I've been buying the dips around the 1,700 to 2,000 area. That's where I've accumulated a majority of them. Because I was really close to where I was wrong, which was these recent lows, that it continued to hold. But I had to wait for the trade to continue to set up, and now it has. So now I have to wait for the next pullback to be able to get into a full position. This is why, traders, your stop price, your risk price, is so much more important than your price target. Hang tight, I'll be right back at my final thoughts.
Why did I add futures to my trading strategy? 24/7 access to diverse global markets, like wheat. Can you say growth opportunity?
We should probably harvest that.
Final thoughts for today, traders. Someone else's technical analysis is someone else's technical analysis. Confidence in execution is one of the keys to successful trading, and that comes from your technical analysis, not someone else's. Each and every week, I go over in the NinjaTrader Charting Edge segment how I'm looking at the market. My goal each and every week is to teach you how I'm thinking, not to tell you what to think. It's so important that we do our own analysis because that's where we get our confidence. All of my interest rate trading friends kept asking, when are we going to get micro treasury futures? Well, you asked and CME Group listened. Micro treasury futures are now coming to CME on August 16th. To learn more, go to activetrader.cmegroup.com. Today we talked about stop prices being more important than price targets. If you disagree with me, put your comments below. If you enjoyed the show, give me the thumbs up. If you didn't enjoy the show, give me the thumbs down and tell me why. If you are enjoying the Develop Your Edge show, click that subscribe button. Remember, you can also DM me on Twitter at Anthony Crudele, and don't forget to check out Instagram, Anthony C. Crudele. That's a wrap for today. See you next week.